Folks, welcome to Thursday Night Stock Charts Live. Ah, thank you for being here. Like, subscribe, hit that notification bell, get alerted when we go live. Thanks for all being here. Today was a really important day in the market. We're going to talk about the technicals of what occurred today. We'll talk about the velocity, the rate of change in terms of price action relative to volume action. How significant was it? Was it a reversal day on light volume? Was it a reversal day on high volume? These are all indications of selling by institutions, and that's what we really want to focus on: is the selling by institutions. How do we know when institutions are buying or selling? Well, you have high volume bars. So, as William J. O'Neill, the founder and recently deceased, rest his soul, recently deceased founder of Investors Business Daily, said, when you see institutions entering the market, it's like the elephant entering the bathtub. Volume just explodes. And this today was the elephant leaving the bathtub, and it made quite the mess. It was a bearish reversal bar up day, ending down. These are what tops are made of. So what I would encourage you to do moving forward, and I've been saying this for a while now, mostly to members because I'm coaching them, but for the most part, you do not want to go buying early green up arrows. You don't want to get excited by futures actions that are bright green. There's an intent. There is psychology behind it. They want to get the amateur money off the bench into the market, spending their money so that when the time is right, well, then institutions can then exit their position because the amateur money is providing the liquidity so that when they sell, they don't cause a tremendous amount of damage to their portfolios, because remember, it's all about them. The trading is a war. It's a zero-sum game. So for every winner, there's got to be a loser. Now, I'm going to share my screen because we're going to talk about the technicals. We're going to talk about the whys behind the sell-off. One of them, I think, is propaganda that was put out there, yield curve control out of the Bank of Japan. I think ultimately that was proven false, but net the markets still supposedly tanked on that news. I'm going to debunk that and give you my own opinion. So I'm going to share my screen here, and let's get started with the charts. And we're going to talk about the weekly charts and how we're poised to close out the week. Now, what you're going to be looking at here first is a view of the battlefield, what was up, what was down. So by and large, it was a market that was driven mainly by Apple, Microsoft, to the downside. Now, we shorted Facebook. We re-shorted the Qs using put options again today. Right before, and I'll show you the chart of as to why we shorted using puts today, the triple Qs. We are also short using the SQQQ. That's a short ETF of the triple Qs, and we keep adding to that. So we're going to keep adding to that. I think tomorrow morning we're probably going to get a counter trend rally. They're going to pull the same shenanigans. You're going to wake up with the futures up 0.5%. This morning they were up about 1.33% when I woke up, and that's a sign. Keep an eye on the market because we're probably going to fade the rally. What you want to see in a market like this is a down morning that closes up. And if we go into a free fall in this market and we go into real serious correction, any rally in the morning is going to get sold into, because that is not a sign of a bottom. You want to wake up in the morning and you want to see blood in the streets in the futures market. The Dow down 1,000 points, just ugly, ugly price action. Only by the end of business that day, the markets close positive. That's a bottom. You need to have a lot of dead bodies in the street with a lot of blood flowing into the sewers before people realize that, oh, wow, the market has gone way too far, way too fast to the downside. Time to buy. Stocks are cheap on a relative basis, and now is not the time. And I'll tell you why we're not, I'll tell you how expensive we are in a moment. So a broad-based sell-off here. You had your outliers. You had NVIDIA, which was up. Obviously, Meta was up. That's only due to the fact that Meta reported yesterday, and they did fade off the highs, and we are now short, and we're up on that trade at current. So let's go to the news of the day, and then we'll go to the closing price action of the major averages. So this is published on Zero Hedge. Market panics after planted story of Bank of Japan, YCC is yield curve control. Tweak sends stocks tumbling, yields and yen soaring. Okay. So if it was a planted story, why did the markets close so weak? Why did they not rebound? Why are the futures flat on a debunked story? Bear with me one second. I want to check out the NASDAQ futures. They may be up because Intel had a really good report. They're up big in the after-hours session. And they're actually down. They're actually down. Why are the NASDAQ futures down if that story was debunked? And let's talk about what the yield curve control is for a moment. We're not going to get lost in the weeds here. Yield curve control, it's yield curve control. The central bank buys large quantities of Japanese government 10 years, longer duration bonds likely to go beyond its allowable range of 0.5 percentage point below or above zero, resulting in market distortions. They've been doing this for years. The proposed change would keep the rate ceiling, but allow for moderate rises beyond that level. All right, so that's yield curve control. Basically, they're manipulating interest rates. So I don't believe that this is the reason why the markets were down. Yield curve, we've been talking about yield curve, but here in the United States for a long, long time now. And the reason why I believe that the markets were down was because the GDP number today. You had a GDP report that came out pretty hot relative to expectations, 2% versus 2.4. Now, some of you that are new to trading may be saying, wait a minute, whoa, that's good news. It's great news. You don't know what you're talking about. That's great for the economy. People are going to work. They're going to get jobs. It's good. I don't know what you're talking about. The reason why it's bad is because this market is based upon fuzzy math. You need to have the Federal Reserve in your corner, cutting rates, or being dovish in terms of their forecasting for future rate hikes, because the market has the highest yields at current since in about a decade, a little bit longer than that. Yet the markets have held up. What happened today? Yields broke out. And when I talk about a breakout, I'm not talking about a daily chart. We go big picture here, right? This is how we survive these big bear markets time and time again. 2000, 2007, 2008, COVID, and all the corrections and bear markets that have been in between. We survive because we look at the big view. This is the 10-year yield, not on a daily chart, on a yearly chart. And you could see that we are just shy of the highs of the year. The 10-year yield had a massive breakout last year, 2022. Now it's getting ready for a continuation breakout higher. We had been in a bear market on yields since, I don't know, they peaked out back in 1982. That's when the stock market bull run began. And it still continues to this day. But we have now broken out. We are putting in higher lows. We are about to put in higher highs. The market is not going to like it. Much as it loved back here, the fact that they broke support and began to go into a downtrend, creating a secular bull market, they're going to inversely hate the fact that yields are breaking out to new multi-year higher highs. What else is happening at current? This is our own yield curve. Forget about Japan. Let's worry about what's happening here. And we talk about this chart constantly. The yield curve, twos versus tens, United States, and the yield curve is up. That is not good for equities. The steepening of the yield curve is not good for equities. Now, maybe by tomorrow, the end of business will be negative on the week. I don't know. But if we do, in fact, begin to break out and put in higher highs and higher lows, that's a problem for the equity market. CME Group, their interest rate probability tables, I took a look at, I did a snapshot of what the market was expecting immediately prior to the Fed announcing yesterday. And you had Powell that was mediocre, hawkish, dovish. What's changed between now and yesterday? This is implying that we hold firm, no change going into next session in September, and not much has changed today. So the markets are expecting a Federal Reserve at current that is not going to raise rates, but it did drop down a little bit. Keep an eye on this. If this continues to be the trend and the probability of a rate increase of a quarter basis point, it gets priced into the market. If it does, I'm not saying it will, but if it does, then equities are going to have a major, major problem moving forward here. And I'm not talking about the Dow names. I'm talking about your high beta tech stocks that are out there, biotechs. They're going to have a hard time. Why? It's because their profit margins, if they have any, are going to get wiped out due to the fact that they're going to need to roll over debt that they took out at zero rates, and now they're going to have to refinance them at current market rates. It's going to annihilate them. And they may not even get the funding. They may go bankrupt. How expensive are equities? About the same. Even after all the earnings that we had come out this week, the market on the week is pretty much unch. Yet, we're just as expensive this week as we were last week. Think about it. We have a PE multiple of 31.63. Why did I short Facebook after hours? Excuse me, after hours. Today, it's because it's trading at multi-year highs, even after a positive beat on earnings. So, yeah, you had your short covering rally today, but it faded off the high. And in all probability, if this market continues lower, as it appears ready to do, well, then you can bet your bottom dollar Facebook is going to reverse. So we have a little bit of a contradiction. Apparently, Bidenomics is so great for the economy that we are now growing beyond 2%. I don't believe it, not for a moment, but that's what the market's trading off of that current, because the charts that I use are a little bit different. I look at the bulls bears measure of bullish sentiment. That's in green. And the S&P 500, they have now pretty much clashed. And the last time that happened was back here in 2021, late 2021. And the equity market went into a pretty nasty sell-off for quite a while. So we're also getting a little bit of a contradiction. This is the Federal Reserve's recession gauge near 40-year high. So we have a corrupt government. There's no debating that. They don't even hide it anymore. We have the non-farm payrolls number that's reported. That's the establishment survey report, reports one number of mind-bogglingly great jobs growth. Yet the household survey is the exact mirror opposite. Prior to Biden, those two were like they traded exactly hand in hand. So the household survey tells one story, which is negative job growth, versus the establishment survey, which is saying, oh, we're beating by a mile. People are doing really, really well. Okay. Do I want to go over this? No. We'll talk about this in a minute. Let's go to the weekly charts. I didn't have a lot to go over tonight. Let's see if anything came out new. No, nothing happened here. Okay. Slow news night. Let's go over the weekly charts. We did the yield curve already. We're going to skip this. Now, we went over the 10-year yield, the macro view already. I'm not going to spend much time on a yearly chart, but we need to talk about the weekly chart to see whether or not we're going to get a follow through the upside. And right now, it looks as though we are going to break out on a weekly time frame. And if we close above 4 spot 34, that's going to be a very, very heavy burden on the equity market. So that's why we were shorting the market today. We plan on adding more. I'll be sending out alerts to members as we leg into the short side on the market. Are we absolutely convinced that the market's going to head lower? No, not at all. That's why we're legging in. It's a process. We respect the fact that the markets have their own ability to sucker people into the bear camp only to rip their faces off, right? So we want to be humble because we've been humbled before by the market. So no great rush to get short the market right now. Now, I mentioned earlier, I just realized I had this up about Facebook or Meta. Here's Meta's PE ratio going back to 2019. Look at where we're at. Multi-year highs on Meta. Hate this. So that's why we shorted it. Weak market. They spiked Facebook up into a weak market. Actually, it was up, but I kind of figured it was BS anyway. And it would fade. And we shorted it. Did very, very well. We did not get in at the highs of the session. We got in just off the highs, but not at the highs of the session. We don't sell a bill of goods here. Quick daily view of the yield. Look at this. Look at this. This is going up. This is going up, folks. And this is what the market saw, not the yield curve over the Bank of Japan. This is the problem with the market. Borrowing costs are going up higher. The ability for people to borrow money, we've covered this topic, is getting a lot more difficult. And credit applications, as reported by the New York Federal Reserve, consumers applying for credit are at multi-year highs. So the consumers tapped out. They have no more borrowing power. They've blown through their savings. And now you have the yields moving up higher. So what's going to happen to all that debt they have on their credit cards? That's going to go up as well. So not only they tapped out, but their minimum payments, which most people pay only, they're going to go up as well. Here's the bond price, TLT, 20-year bond price. We're holding support on a weekly time frame, but I'll tell you, we closed down below 98.85 per share on the TLT. Sayonara bond market, daily chart. Look at this breakdown. We bounced off of support, but wow. Look at the volume. This is what I was mentioning before. When you have institutions leaving the equity market or entering the equity market, in this case, the bond market, this is what you get. Spikes higher in volume. We watch this here at the Contrarian Trader constantly, religiously, every single night. It was a down day. Was it a down day on volume? That's all I care about. It was an up day. Okay, it was an up day on volume. That's what matters. Volume, volume, volume. Tips, Treasury inflation protected securities. They reversed higher yesterday, now lower on the week. Very bearish price action. So if you're thinking about going out right now, buying gold, don't do it. Don't do it. Not yet. Don't do it. It'll be a better time. And especially the gold mining stocks. We're going to go to that in a moment. The dollar, bearish reversal bar. This is the reason why I'm saying, for now, avoid the mining stocks. Yields and the price of gold can go up at the same time, as long as the US dollar does not participate and goes lower. They did it back in the 1970s through the early 1980s. It'll do it again. So bearish reversal bar on the week so far for the US dollar. That's bullish for gold. But right now, with the equity market coming under pressure, everything will get sold. everything will get sold. Gold mining stocks will all go down. If you see the rate of change of the sell-off increase, meaning the percentage move lower gets more and more dramatic and we close at the lows of the day, guess what happens? Margin calls go out and people are going to sell what they can sell. If they don't sell, their partner over at the brokerage firm is going to sell it for them, and they don't care what they sell. They're just going to get you out. If you nugget, which we have a small position in now, they'll send that out first because that has the highest, or they'll sell that first because that has the highest margin buying power release. It's 50% buying power, I believe, on it. So be careful, folks. US dollar, this is a daily chart. This is wrong. Or is this right? Why is it showing down on the week? Oh, now, wait a minute, I'm so confused right now. Oh, the weekly chart was not updated. Okay. This is worse for gold. No wonder why I was down today. I really didn't look at the dollar too much today. So I just refreshed this. That was as of the 26th. This is what I don't like about stockcharts.com. It can embarrass you at times. So now we're up on the week. Now, really, you need to avoid gold. You got to avoid silver. You got to avoid the mining stocks because they're probably going to head lower because now you have the trifecta. You have bonds going lower, yields going higher, tips going lower. It's not even a trifecta. It's more. US dollar going up higher. This is not good for the market. VIX, it is now off the highs of the week, but good enough for government work, close enough to a breakout here where you really need to get concerned about, am I too much on margin? Am I too leveraged up? If you are, fine. Do something about it. Take action. You got a profit on a stock? Maybe you want to take a little bit off the table. You got a loss on a stock that looks like it may go lower? Take a small loss now. Why fight it? Don't let small losses turn into a big loss. If you got a gain, don't let it evaporate. Make it real because we're going to talk about the equity markets right now. Here are the Dow transports, weekly view. Wow. A major run here, but it's extended. It's due for a pullback. You can't buy these right now. And in fact, my guess is they were down today. I did not look. Yeah. So you had a breakout point failure. So we need to update this. And what a breakout point failure is that you had a breakout yesterday. Today, it failed to hold the breakout here in red. So now what you need to do is you need to take a crayon out and say, okay, what's my lower band of support? And my guess is that we may have hit an upper band, as we did. We tapped that upper band of resistance yesterday. So watch for more weakness here on the Dow transports. Dow Jones, weekly chart. A very powerful run here, at least on a daily time frame, a decent one on a weekly time frame. We are still holding a breakout. We broke out last week. We're still holding 35,000. Very critical support number to watch. We're closed at 35,282. That can evaporate like that. So we want to see, if you're bullish on the market, you want to see the Dow, which has been outperforming the Qs recently, close above 35,000 on the week. Entirely possible, but it's in jeopardy. Daily chart. Not looking good here. It's been struggling at 35,500, and it looks like we could pull back tomorrow. And we were down on volume. Volume matters. S&P 500 daily chart, or weekly chart, I should say. Money flow rolling over. We are up on the week, but all up weeks are not made equal. We are off the highs of the week and flirting with going negative. Volume on the week is no bueno. This is not good, and it hasn't been good. It's been declining to the upside. Not good. What that means is that you have fewer and fewer buyers willing to step up to the plate to buy stocks. So that's not good. It leaves the market vulnerable to a sell-off if institutions decide to sell. And look at this. This is an outside reversal bar, a bearish engulfing. If you don't know this terminology, use the link below. My top 5 favorite candlesticks, linked below. It's free, 5-part video tutorial. S&P 500 outside reversal bar. This is in all probability going to go lower. Stokes are extremely extended. This is extended. This is a momentum indicator, which we need to update now. Note how we have been putting in higher lows on price, yet stochastics are not validating it. They weren't validating it with new higher highs like they did before. Now we're pressing up higher and we're putting in lower highs on stochastics. What that means is that the markets, despite the fact that they're moving up, they're losing momentum. They're not holding all those gains. And now what you're seeing is lower highs. That is a bearish divergence. Now, what you need to worry about is when we begin to put in lower low. I don't need to draw a line here. Lower lows. And that lower low would be represented if we break down below this lower band of support in blue. So look at the volume here today, big volume. So institutional distribution on the day. Trip Qs, of which we are now short. Again, we've been shorting them from time to time. And weekly chart, we're holding on to support. So, you know, I could come on here and I could be a perma bear and talk about the whys behind the market. Could go down there. Listen, any argument that I could put up as to why the market should go down, that argument's been around for a long, long time now, and the market's gone up by and large. We've had our corrections, but by and large, it's gone up. So you could say we have too much debt. The market's got to go down. All right, so we were in debt back in the 1980s, right? On a relative basis, there was a lot more complaining about Reaganomics and how much debt we were in back then than there is now. Nobody gives a crap about it anymore in Congress, except for Rand Paul and names like that, to his credit. So what we could be looking at here is simply a consolidation. That's all. And as long as we hold support at, let's call it 375, where do we close? 374, a little bit lower than that. 373, we're right there, not far away. This can continue up higher. But I don't think it's going to, which is why we are short. Daily view. All right, so I titled this live stream double top question mark. And you know, double top is simply that, it's not simply that you put in a lower high, right? It's not, that's not what a double top is. A double top is when you put in your lower high here, and then you break to new lower lows. For all I know right now, because we tapped came close to tapping the lower band of support here. We found support at the 20-day moving average. We could consolidate in this wedge formation, setting the stage for another breakout. I don't think it's going to happen. I think we're going to break support down here and break to new lower lows. That'll probably send us down to 355 on the triple Qs. We'll add to our short position if, in fact, we do close down below support, especially on a weekly time frame. So again, going over what's a double top. It doesn't necessarily have to be a lower high. You can get an overshot or overshoot double top where you break out higher, eclipsing this prior high, yet it can't hold it. It fades, right? That's still a double top. And then the validation or the confirmation of that double top is when you break down to new lower lows. So in general, lower high, lower lows. That's your double top. We're not there yet. We're at the precipice. Momentum is waning. It's in trouble. So again, I'm going to go back to what I mentioned earlier, especially for those joining in here new, and that is don't go chasing the green futures. I didn't say hello to anybody. Don't go chasing the bright green futures. I did not say hello to people. That is rude. That is very, very rude of me. I apologize. Let's take a pause here. Seymour Rivers, welcome. Thank you, sir. Audio is good. I'm so glad. Could you imagine I was talking this entire time and the audio wasn't working? Thank you, Seymour. Heat index is 108 in Louisville. Wow. It's so hot you can make a chili dog. I'll take one of those with sauerkraut. Thank you, sir. Talon. Hey, Talon. Hey, brother. RB. Welcome. Happy Thursday, brother. Donnie. Welcome. ES. You are authentic. I enjoy the content. Thank you very much. That's very, very nice of you to say. Thank you, Bob. If you have the time later, we should look at Cat. You got it. Little bit of buttering up. That never hurts. Thank you, sir. Appreciate it. That's what we strive for here. Straight talk. Now I got to find a pen. I put it in my computer bag. I forgot to take it out. There we go. Now we're ready to work. Trader Isaac. Hello, Bob and all. Bidenomics is a joke. No doubt about it. More like America last. True. Unfortunately, very true. Hey, Bob. Finally bought SQQQ at the open. Good for you. Nice call. MSFT. Yes, we. I didn't put the alert out, but we opened up a position on MSFT, and I'm glad I forgot to put the alert out. We opened up a ratio strangle. What is that? It's basically when you sell. In my case, I sold 10 contracts of the 9/1/23 calls. So September 1st expiration, and I screwed up on the put side. I sold the puts. I sold or vice versa. What did I do? Either way, I didn't make the same exact expiration date on both, so I kind of screwed that up. I was wondering why I wasn't showing profitability. It's because there wasn't enough time decay. So we have a ratio strangle. We're biased to the short side on Microsoft, as well as now Meta effective today, Qs, and what else do we have? We have Boyle. We have a strangle that opened up there. Tesla, we booked profits on today. We're out of Tesla. What else? We're out of NVIDIA. We booked profits there, but that was a few days ago. So it's a good week, really good week so far. So let's go to the intraday chart. I want to illustrate, let me finish off saying a lot of people. I don't want to get people get annoyed. Hey, Bob, if you sign up to be a member, what level of transpired do you get? It's not a level that you'll see on their website. It's a hybrid. It was a negotiated hybrid between their owner, Dan, and I'm going to their plans right now. It's not the high end. It's about mid tier. I want to be more specific. Okay, here we go. Product. I haven't been on here in a while. They changed their website. Product. Here we go. They should have this bigger. I'm surprised. All right, we're We have all this. Yeah, we're along the lines of elite. As a matter of fact, I think it's time to go back because they've added so many products to their service. We're closer to the elite level, not the top tier, certainly not the bottom tier. So, and it's the silver or gold level chip, and there is a variation there between the two. You get uh, more scans and stuff like that with the gold level membership. There's a difference in level there as well, but it's not exactly what you see here on their website. Again, it was negotiated, and that was in 2019, maybe even longer. Uh, you've I've looked at getting it, but they sell different levels. So no worries. Alan, all you can always upgrade. I wouldn't go for the lower tier. I would go for the mid tier, and you can always upgrade. So that's what I would do. Yeah, gold and silver, both. I check oil and realize it's gone way up since the beginning of the month. Low CPI reads over. No, I don't think that is the case, and I think that the fact that remember what the metal. Let's say CPI goes up. That doesn't mean that gold goes up. It never has. When gold goes up, it's because the Federal Reserve is implying that they're not going to be as diligent in fighting the inflation that they're seeing. So if they do that, then gold goes ripping up higher because the dollar rolls over, right? And as soon as the dollar rolls over, that's the green light for gold and the gold mining stocks, silver to go through the ceiling because you have a Federal Reserve that's asleep at the switch. Why hasn't the gold broken out with inflation at multi-year highs? It's simply because the Federal Reserve has been the most aggressive Federal Reserve in history, more so than Volcker. And I'm shocked. I'm even saying that, to be honest with you. But if in fact you begin to see economic weakness and the Federal Reserve, and CPI continue up higher, so you have a weakening economy and CPI going up higher, then the Federal Reserve is boxed in, and they have to decide whether or not they salvage the worker or do they fight inflation. If they fight inflation, that means job cuts, slow down in the economy because they have to slow the economy even faster. But the economy is already slowing. So they're going to only throw gasoline on the fire. So if they want to salvage the worker, help the worker, supposedly they would go in and give rate cuts. But what does that do? It throws fire on inflation. They're boxed in. They're boxed in. And I don't think the gold markets get it yet. And I'd be a buyer of gold and silver if I believed that equity, or if I didn't believe that equities are going to go lower. Because if you go back to a chart of the stock market in 2020, when finally they realized that the supply chains were going to get knocked offline. I was saying it when this was coming out. I said they're going to shut down the supply chains. This is bad for the market. The markets were rallying, and sure enough, the markets headed south, and gold went down. Not as down in conjunction with the market, but it went down. The gold mining stocks got their head ripped off. They were destroyed. Nugget went from a triple leveraged ETF to a double because it broke. It broke the algorithm. So they can go down. They will go down because forced liquidation. Simple as that. But they will be one of the first to recover as the Federal Reserve cuts rates. Why do we focus so much on the yield curve? We focus on the yield curve steepening because that's the Federal Reserve responding to crisis. That's why we watch it so closely. It's our timing mechanism. CNBC is never going to tell you about this. Never. They want you to listen to Johnny on the spot, slick back, well-dressed bankster that's out there trying to sell you a bill of goods. They don't want you watching the yield curve. They don't want you knowing anything about it. God forbid you were educated. Hi, Bob. I'm late here. All right, Teasy Bird. I'm late to read the comments. So technically, you're not late. Thank you. Got it, Alan. Anytime, pal. All right. So that's that. We can log off here. And by the way, folks, it's a very oh, they got a deal. I get 35% off. They're doing what now? They're doing 60% off when you prepay. Use the link below. I still get credit for it. Elite plan. Wow. That's a very good price. Wow. Link below. Don't use that discount code. Use theirs. Okay. Now I want to talk a little bit about moving forward. All right, because there's going to be shenanigans afoot, folks. If they continue these down volume days, meaning down day, high down volume bar, they're gonna mess with your mind because everybody's conditioned, right? Everybody's conditioned to a bull market. It's been a heck of a run off the bottom. They're conditioned for a bull market. So what do they need? They need the amateur money, which you are not. You may not have the account of a whale. However, you're here. You're here. You're not playing video games. You're here. So what you want is not to buy the bright green futures. If you're a fisherman, you'll know what a diamond jig is. A diamond jig is meant to attract barracuda, mackerel. You don't want that because it's deadly, right? They use those futures as a psychological tool to get you in there and get you buying. All the while, you're bidding the market up higher. What are the whales doing? They're selling into you. They're selling into you. That's the game. It was like that when I got here. After I leave here, it's going to be the same thing. Don't buy the pre-market futures. Don't buy them at the open. Wait till you see how you close. Awesome. Me playing video games as I listen. You're multitasking. That's fine. Okay. That was awesome. So watch for a spike up higher. Just like they did today, folks. They spiked the market up higher. What do? Dumped it. Pump and dump. Let's move on. Enough of that. Banks were annihilated today. But to be fair, the banks broke out last week. All they're doing right now, we want to be matter of fact about this, right? We don't want to go screaming, oh, it's a bearish key reversal bar. You got to short the banks. No. There's one trading day left to go. For all I know, they're going to close at the highs of the week, right? It's only Thursday. One trading day makes a difference. Right now, it's not looking good. But the but is for bulls is that we're still above support. Have we broken support? No. Daily chart. Because the banks are important. We did not have a breakout. It was stuck here. The markets are sending a signal. So it could be a bit of a double top here. Doesn't mean they're going to crash or anything like that, but it appears as though a little bit of a double top. Stokes are very overbought. So I would avoid these. Do not buy the spike. Please do not buy the spike in the morning. Take a look at this. Take a look at this. What was that? Ultimate oscillator? Good. Another signal. The markets send us signals. We can ignore them or we could pay heed. We're going to bring this up here. All right, so let's get our crayon out and play a game. So right here, bearish divergence. Bearish divergence. Why? Because they kept pushing the market up higher. This I understand. This I can almost understand as well because we were pausing. We weren't closing at the highs of the session. But this is a screamer, man. Declining velocity, right? Lower highs, but subtly lower highs as they were pumping the share price up higher. Then it began to gain momentum. This is now in your face of a bearish divergence. And now, do we have a higher low? I mean, a lower high? Excuse me, a lower low? A lower low? Yeah, we do. We broke down to a new lower low. Make this accurate. There we go. We close down. Beware the banks right now. If you're long of them, think about selling some covered calls. I'm not saying sell them, but covered calls would be good. Generate a little bit of cash flow. Technology. Okay, so technology sent us a signal yesterday because XLK trades very, very similar to QQQ. The charts you get overlaid almost exactly the same. Now, the chart of the triple Qs yesterday, and I went over this last night on Market Wrap, looked like this. Ignore today's candlestick. We put in a higher low. We closed down, but we rallied off the lows of the session. Okay. So a down day, but not a horrible day. We held the 20-period moving average as we did today. Now, take a look at the XLK. This is pure technology. I lost the chart. Take a look at what it did yesterday. Yesterday, it broke to new lower lows. Double top, break to a new lower low. That's a confirmation break of the XLK. Double top, confirmation break. And today, they tried to rip it up higher. What happened? What was expected? They sold into it on volume. Semis, up on the week. This is topping action, though, folks. Let's check out Intel in the after-hours session. Futures are now up slightly. Intel, that's going to be the narrative for tomorrow morning. Guaranteed. You're going to have ExxonMobil out. You're going to have Chevron out tomorrow morning. And the talking heads are going to be talking about Intel as if it's this Goliath of the industry that it used to be. It's not. But they had a good report. So they're gonna spin this yarn tomorrow. And they're probably going to goose the market up higher. Have little doubt. Weekly chart, topping action. We have not been able to put in a new closing high for the past couple of weeks. And look at this. 157.55 was our prior high. Where do we close? 157.46. Let's take our crayon out. This is worthy of a resistance level. Look, any wonder? Any wonder why they're struggling here? We're right at all-time highs. LABU, biotechs. Biotechs hit hard this week. Very hard. Avoid them. Staples, bearish reversal bar. They've been very, very strong. They are now somewhat weak, but they may see some money flow on a pullback to $75 a share. They're considered to be a safe haven, so you may see some money rotate into them, not right now, but in the coming days. Now, discretionary names, they have broken down so far on the week. One trading day left to go. Maybe they'll rally back and hold support tomorrow. Daily view. Outside reversal bar. Again, for those folks that are joining in late, 5-part video tutorial on my top 5 favorite candlestick patterns. This is one of them. It's free. Outside reversal bar. This is going lower. Volume was not that bad today. Emerging markets. Right at the top of a trading range, weekly time frame. Expect a pullback. They were strong yesterday, reversed today. Why? Strong US dollar. Energy. Great week. They broke out last week, follow through week. This week, would I buy them? No. I want to see a retest of 82.50. If the markets begin to sell off, then I'd be a buyer. Momentum building, looking really, really good here. Daily chart. Not an outside reversal day, but a reversal day, holding support, volume, light. I still wouldn't buy them yet. Wait for that retest. Oil. Inflation. Up 3% on the week. I don't care what the Federal Reserve says about it. We only care about the core. Oil matters because it filters through to everything that's in manufacturing. Going higher. Very bullish price action here. Daily view. little bit extended, but this can move up higher. Oil, of which we now have a position in. Down on the session, we have a fairly neutral position on Boyle where we sold premium. The premium was okay. So we sold some puts and we sold some deep out of the money calls. Now we're in Boyle, making a little bit of coin every day. Like milking a cow, it pays us. So Boyle off the lows of the week. Daily view. Actually, I want to go to the weekly view, not daily view. We're on the daily view. Weekly view. This is not good. This is going to need a very strong day tomorrow. A very strong day. Because we broke out last week. We recaptured support. Now they're giving it up. We may be exiting the trade if we fail to hold this support level. Beware, Boyle. Members expect potentially an exit from that trade. Would only be a small loss. So we'll keep an eye on it. If it rallies tomorrow, closes at above this lower band of support, we will stick with the trade. But if it fails, got to get out. Gasoline prices, inflationary, up 4.5% on the week. All is well. All is well. So says the Federal Reserve and our esteemed, honorable politicians. Gold, bearish key reversal bar, failed to hold 1950. No bueno. Daily view. Double top. Here you go. Double top. We broke down to new lower lows. Avoid, folks. Simple as that. You'll get a better deal. GDXJ down over 4.75% on the week. So in this case here, what do we want to do? It's simple. What do we want to do? Do we want to bet, hope that we've hit the lows because it got hit so hard this week? Nope. We use a rules-based approach. If this, then that. There is your upper band of resistance. Here is your lower band of support. Now, I'm projecting that we're heading down to around $32 a share on the GDXJ before we get a real serious bounce. How do I know? It's because that's where it's bounced before. Back here, here. We're looking at $32 a share. The longer it takes to get down there, the lower the price target will be because this is a lower descending lower band of support. So as time goes by, that 32 now becomes 31. As time goes by, it becomes 30, 29, etc. Now, I own some of this. We sold some, but I own some of this. I don't want it to go lower, but it is. So understand the whys behind it. Nugget, same deal here. Wrong chart. Same deal here. Lower highs. You got to wait for a breakout. There you go. There's your upper band of resistance, lower band of support. I think we could very easily go into the 20s. I said that a couple of weeks ago, and I got kind of embarrassed because we rallied, but we couldn't break out. It's as simple as that. So I think we could easily see the 20s, if high 20s. If the market gives in, meaning it breaks down, we could easily go down to the mid to low 20s on Nugget. How do I know? Because I've been there before, and I've seen it. This is why I did not want to sell puts here on Nugget, because they're not paying enough premium to get far enough away from the closing price of the day. I think that it's going lower. I thought it's going low, which is why we sold a couple of months ago. And I would love to sell puts. I need to get paid premium to take that risk. And maybe they'll goose the premium and they'll make it interesting. But right now, it's not. Therefore, we avoid, watch, and wait. Do I want to talk about anything else? No, we're good here. Let's do some chart requests. Again, folks, we're going over the charts with Trend Spider. Let's go to a daily chart. We'll bring up our, look at Microsoft today, hammered. Bloody. Okay, so here we're at. Let's take a look at any requests here. I know we have Cat, SoFi for Trader Isaac. I had to go to the members area. See what's been ordered. 3M. I believe they reported, right? I believe they reported the other day. Who requested that? Tomas. Talon. Our weekly chart of 3M. I still like 3M. This is one of my top picks a couple of weeks ago, and it's broken out really nicely. It's backed off of the week, but you expect that because of the third standard deviation Bollinger Band. Volume, awesome. Stokes, awesome. This is one where if the daily chart looks good, I would say buy it. Look at this. Oh, what a nice rally. But here, the automated trend lines, and take them off, put them back on. They're telling you that there is resistance above. And if you had an alert set up here yesterday where you long, you would have known, perhaps book some profits, make them real, because today we pulled back. So would I buy it here? I would pause. And the reason why I would pause is that we had a nice straight shot higher. I'd like to see us retrace back down to some support levels. Let's go back to the weekly chart for a moment. I like the 107, 108 mark. Let's create an alert. Oh, I didn't want to do that. Create an alert. There we go. Touch, bounce. There we go. And we'll try to get a little bit of a discount. Now, another way to play this would be selling puts. You're not going to get paid much for the premium, but who cares, right? If you want the shares, you get a discount if they're assigned to you. And we'll create an alert. There we go. And we're good to go. Our alert is set. So 3M looking good here. The market's got to go hold up, though. If the markets break down, don't expect much out of 3M. It looks like it's pretty much put in the bottom. I would sell puts here. That would be my game. It doesn't look like it has a lot to fall, so I like it. If the market continues up higher, 3M going up higher. All right. So we got Cat. We got SoFi, Cat, Donnie, CCL, Lucid. Okay. And we'll cut it off there because I have only a minute left here. SoFi. Weekly chart. Got a lot of resistance up here. Right here at this volume shelf. $9.99. Yeah. I wouldn't be a buyer here. It's got to close above $9.99, $10 a share. And it did not have a good day today. It had an outside reversal bar. Potential. Yeah. This could be. I don't think it is. I'm thinking I'm being a little bit too optimistic here. I want to say that this could be a bull flag setup. Start looking at around, if you want to buy the pullback, Yeah, broke support today. Look down at around 850 per share if you want to nibble there. But I'd be a big buyer on a close above $10 a share with a market that's rallying as well. Cat. Let's go to the weekly chart. We're still in an uptrend channel, but almost an ascending wedge. The Dow Industrials have come a long way. They need to pause here. I think there's more upside to be had, especially looking at that weekly chart. If we consolidate and then we hold support that we broke out of last week, I think that these names have a lot more upside to go potentially. But if the overall market begins to break down, then they're in trouble. But these big Dow names, I'm not too worried about these names because if interest rates move up higher, because they have pricing power. They are boring businesses that just grind out money. Boring businesses historically are just money makers. They pay out dividends. People don't want to sell them because they love collecting that little dividend. So I like CAT. I like 3M. I like these names because it makes sense. What doesn't make sense in this environment, we have yields that are now going to be potentially breaking out to new multi-year highs. Small caps don't make sense. I couldn't believe that they broke out yesterday, but they broke down today. We already went over that chart. I believe we went over that chart. I don't think we did, as a matter of fact. It's worthy of going over. Here we go. So here was yesterday's breakout on small caps. Today's yields rose. What happened? Annihilated. The mother of bearish engulfing bars. So these don't make sense in this environment. What makes sense is the Dow Jones, the Dow Transports. They make sense if the market's going to continue up higher. That's the transports. They've been outperforming the Qs. Dow Jones, they make sense. But they are going to pull back. So these names are as well. So CAT, you got to look at the big picture. If the Dow Jones rolls over, this is going to roll over as well. It's had a nice run. I do believe there's more upside potential here. We need a correction first. We've broken down on out of a wedge formation, upper band of that wedge formation in green, lower band in red, and we've broken down. Avoid CAT right now. There'll be a time in the future. Now is not the time. It's extended and it's going to go lower. CCL, Carnival Cruise Lines. All right, so I want to tell a good story here, but I can't because what happened here is that Carnival broke down, not this week, but last week, broke support, weekly support. Now what it's doing is flirting with an effort. People are delusional. They believe they don't look at the charts. So they're stepping in on this pullback and they're bidding the shares up higher in an effort to break it out. Maybe they will. Maybe they will. But if the market continues to weaken up, the probabilities favor bears. Now, if the markets regain their footing, this is a speculative stock. No matter how you slice it, it's a speculative stock. And sure, Wall Street bets get a hold of this. Can they spike it up higher? Yeah, they can. But I wouldn't be a buyer here until we close back above 19 1910, 1920 per share. Daily view. They spiked it up higher. They faded it. I would avoid this right now. Remember the weekly chart. Don't pay too much attention to the daily charts. Wait for that breakout before you get involved with Carnival Cruise Lines. Last one up is Lucid, LCID. Now, Tesla got hammered today. We're right at support. I mean, I would wait on this one. I would wait because in the back of my mind, when I look at this chart, I always think, what's the market doing? What's the market doing? What's it telling me? Then I look at this chart and say, do I want to buy it? Because 80% of stocks generally trade with the overall market. So this is a small cap stock. What did the small caps do today? They got hammered, destroyed. Will they go lower? Yeah, they're going lower. So Lucid has now flashed a bearish reversal bar on the week. It is now negative. The good news here is this, is that we're still in a trading range, a long-term trading range. So when this breaks out, it's going to be a monster rally. But right now, we're still stuck in a trading range. So the question is, do I want to tie my capital up in Lucid when I could go do other things? Sell premium on stocks, go do stuff that generates cash flow, and it keeps me away from the fire. I don't want to get my hand burned. I don't want to go buying stocks right now. I don't really even want to go shorting them. I did somewhat. I have short positions in Facebook and in Microsoft that are pseudo short positions where they're time decay plays. That's all. They're deep out of the money calls. So I'm not aggressively short of these names, but my bias is to the short side, especially now with the shorter Qs. So once the market begins to find its footing and begins to rally, and you begin to see Lucid break out and above and close, most importantly, above this resistance level, then different story, game on to the upside for Lucid. Right now, all I'm looking at is a stock that's in a trading range in a weakening market. I don't want to tie up my capital. Put it to more productive use, and then revisit Lucid when the markets find a bottom. So maybe the longs, amateur longs, weak hands got washed out of Lucid. Maybe you can get it better on a double bottom setup down here. I'm not saying it's going there, but it could if the market weakens up. Daily view. Yeah, this is a lot of resistance above. You got to get a breakout in a strong market. And we're not there yet. We're in purgatory. So I would avoid this right now. In the future, we'll revisit it. No doubt about it, Tony. All right, all. Thanks for being here. Like, subscribe, hit that bell button, get notified when we go live. Don't forget my top 5 favorite candlestick patterns linked below, and Trend Spider. Don't use my discount code. Use my link. They're giving 60% off over on their website. Take advantage of it, folks. Have an awesome night and a profitable trading day and a great weekend. Thanks for being here, and be well.